All right, good morning, everybody, and welcome to another session here on Facebook Live. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hopefully, everyone is doing well. Before we get started, just want to make sure, let me know in the comments if you guys can hear me. Let me make sure the sound is good, video is good. Looks all good on my end, so just want to double check with you guys. But while we're waiting for those comments, good morning, Troy, Viet, Tom, Naushad, Pashal, Carrie, Curtis, Laura, hello, welcome. Glad to have you all here. Welcome to all the new people. Welcome to all the people who have been here for a while. I'm glad to have you guys back with us. Just to let everybody know, what we kind of do here is every single Thursday we go live and we talk about the VectorVest Stock Advisory app. It's one of the most comprehensive apps out there to help your investing, help you make smarter, faster, better decisions right from the palm of your hand. You know, if you're somebody that has money in the market, this is a must-have for anybody that's trading, anybody that's investing here. There you go, Ross. Sounds good. Awesome. Thank you for that, Laura. All right. Yeah, seeing a lot of people confirming that everything's sounding good, everything's looking good. Awesome. Thank you all. So once again, welcome. My name is Patrick France, Senior Instructor here at VectorVest, especially if you're new. Just to give a little insight on myself, I've been here for over 9 years now. Started off in support, working and answering customers' phone calls, helping them out with tech issues, helping them learn how to use the program. And then from there, moved up into more of the senior instructor role, helping out with the mobile. A lot of people have the title, or a lot of people, talk about I'm the mobile man here, because everything I do is based off our mobile platform. And that's why every single Thursday we do these sessions to help you get the most out of your mobile subscription, or if you're not even a subscriber yet, to teach you what you can get from it and how it can help your portfolio. So what we typically do is we start to take a look at what's going on in the market today. Then we'll dive into our topic of discussion. Then, as always, we save the fan favorite till the very end, but we'll show you how you can analyze your stocks in less than 20 seconds. So with that, let's go ahead, jump into the app here today and take a look at what's going on. So right now we can see the market is mildly bearish, and VectorVest does not advocate buying any stocks at this time. If we scroll down, we take a look at the color guard here. We can see we get our first red light in quite some time here, which is giving us a sign of caution. But this should come as no surprise for anybody who's been tuning in the last few weeks, because as we've been talking about, the market has looked top heavy. We've been talking about understanding the MTI and how that affects, or how that helps you on short-term trades. We've talked about 4 key tips to identify how to protect your profits, or 4 key tips on identifying patterns in stocks that will help you lock in more gains. So we've talked a lot about how the market is top heavy, that we should, take it while we can for the upside, but expect some sort of a pullback in the near future. And it looks like after the Fed announcement yesterday, fears sparking again of a new uptick in coronavirus, cases, that does seem to be causing the market to take a deep breath or take a step back at least, and reconsidering, what's going on and how that's going to affect the market going forward. So as we can see, the 3 key indicators we use to analyze the market are price, because knowing price direction is crucial before you ever get into a trade. You want to know if the market's moving higher, lower, and the price direction definitely tells us that. Now, after that, we get the RT, which is the short-term price trend in the market. This is going to be on a scale of 0 to 2. So above 1, short-term trend is still up. Below 1, short-term trend would be down. 1.22, short-term trend is still up, but as we can see, it's definitely moving lower from the highs we had just even a few days ago. Then we look at the buy-to-sell ratio, which is looking at the overall health of the market. So every single day, VectorVest gives a buy, hold, and sell rating on each stock that we track in the database. So if there's more stocks that have a buy than a sell, the buy to sell ratio will be above 1, which shows strength of the market. Below 1 shows that there's more sells than buys, or weakness in the overall market. As we can see, we hit a record high just a few days ago at 12.55 or 12.8 just 2 days ago even. Since my 9+ years of being here at VectorVest, that is the highest I have ever seen the buy to sell ratio. Same with the MTI, 1.82, the highest level I've ever seen the MTI reach over my tenure here at VectorVest. So, all those things we talked about a few weeks ago showed us that the market was definitely getting top heavy and that we should be careful at the time. Well, look what we have here today. So after the MTI, we then get the trend, which shows two parts of the trend each and every day. First part is just showing the weekly trend of the market or the short-term trend of the market. As we can see, it is down since the price of the VectorVest composite is lower than it was 5 trading days earlier. The second part is just looking at the underlying trend of the market or reiterating the MTI. So since the MTI is above 1 still, the underlying trend will remain up. Then after that, we get the calls column, which stands for our confirmed calls. Now, if you're a conservative investor, the confirmed calls are going to be the most beneficial to you. They are our last signal to get into the market and our last signal to get out. Therefore, if we have a confirmed call change, we never want to ignore that, and we definitely want to do some more analysis or look closer into that at the time. But as you can see right now, even with today's first down day, we still have a confirmed up situation. So looking at it here, scrolling down a little bit, we get the advances and declines. This is something we talk about week in and week out. If you're ever going to be buying a stock or shorting a stock, regardless of who you are, what type of investment style you are, you always want to take a look at the advanced declines. If the market's moving higher, we typically want to see twice as many stocks advancing than declining. But since the market's moving lower, we want to see at least twice as many stocks declining than advancing. And we clearly have that bias here today with 9% of stocks moving higher and 82% of stocks moving lower. If you're going to be opening up a bearish trade, you have confirmation from the advanced declines here. Then as we scroll down, we take a look at the major indices. So the Dow is down 3.6% here today. One of the biggest drops we've seen since late February, early March. Down almost 1,000 points here today. Looking at the NASDAQ, down almost 2% for the day. And then the S&P down just shy of 3% for the day. Now, we look at the VectorVest composite, and if you're new, not familiar with the VectorVest composite, it's what we here at VectorVest use to analyze the market. When I talk about the market, I'm typically going to be talking about the VectorVest composite because we feel it gives us a better representation on what's going on, because it's not just looking at the Dow's 30 or the NASDAQ's 100 or the S&P's 500. It's looking at about 8,200 stocks out there that we track every single day and giving us a better representation on the overall market moves. So you see the VectorVest composite going up. That tells us that, the majority of stocks, not just a small portion of the stocks, are moving higher. And if it goes down, we know that the majority of stocks are moving lower and not just one small segment of the market is moving lower. So it's definitely a benefit here at VectorVest that you're not going to be able to find anywhere else by utilizing the VectorVest composite. There we go. Awesome. Sorry, got caught up. The comments were taking had a delay, so finally getting caught up on some of those. This week's been crazy. I couldn't agree more. But, luckily, if you've been tuning in on a weekly basis, you're well aware of what's going on and you're not caught off guard by these pullbacks that we've seen in the last couple of days. So, with that, before we get into today's topic, I was going through some of our previous videos and looking at the comments, reading the comments, looking at what you guys were asking about, and then looking at, what's going on in the market, and doing some researching on things. And that really is what, sparked the interest for today's topic. There was a lot of people over the last few weeks that have been asking about oil stocks, cruise liners, airline stocks, pretty much the major indices or the major industries in the market that have been hammered over the last COVID-19 crisis. And so therefore, we want to jump into those today, take a look at those, take a look at some of the stocks in those industries and see what they're doing, what the analysis is telling us, all of that, and really give a good breakdown and go over, what VectorVest does best. And that's analyzing those stocks and giving you solid information that you can use, not just data that you would have to, analyze on yourself, but actual information, usable information to help you make smarter, faster, and better decisions. So with that, if you guys have stocks in those, I know there's a lot of stocks that people have been asking about the last few weeks. So if you guys have those stocks that you want to take a look at, put those in the comments now. We'll get a watch list built up together. But while you guys are getting those in, I just want to show you how I came to this conclusion. Not only did it come from reading the comments that we've had the last couple of weeks, but, when I was going through, I was, looking for what's really moving in the market, what's hot, what's not. And one of the things I really came across, or that I like to use a lot here, is under the more section, there's a screener. And if you go to the not featured screens, explore screens, you can do all of them. And I was looking at the 10-day top gainers. Just short term, what's really moving right now. And when I was doing this yesterday, coming up with the topic for today, I was going through and I noticed a clear trend that the majority of stocks that were showing up here were, Norwegian cruise lines in general, airline stocks, oil stocks. And they're all the stocks that you guys have been asking about over the last few weeks. So I decided, you guys had a lot of interest in those stocks. We're seeing them as big movers here. So what better way of utilizing the mobile app than looking at those stocks and seeing the real analysis on them to help you guys make those smarter decisions. So I see you guys already coming in with some of those stocks. So I'll go ahead and we'll build a watch list together of these stocks. But I just wanted to give an insight of how I came up with this, how I was able to confirm what you guys were asking about as well. All utilizing the mobile app here. So now that we've had that, you guys have an idea of where I'm coming from and why we're talking about it here. Let's go ahead, go to the watch list, create a new one. We'll call this Trendy Stocks. Actually, let's just put in some stocks first and then we'll give it a name. I always do that. I'm so used to the old way of doing it. All right, so XSPA, Express Spa Group, MRO, Marathon Oil, DOG. I think that's an ETF. Yeah, we'll talk about those in a little bit. This is just looking at, oil, the main trendy areas of the market right now. Airliners, cruise liners, retail investing or retail stores, oil right now, big headline companies right now that are in the market. So let's see, PK, what is PK? Resorts, all right, that'll definitely work. DNR, that'll definitely come in here. Expedia, EXPE. ZM, looking at it, something I didn't consider, but something that could be very beneficial with all that's going on right now. Alaska Air, ALK. AAL. NCHL, NCLH, there we go, CRL. And see, this is something that you guys could all do on your own as well, by building stocks of, or building watch lists of stocks that you're interested in. Let's see, CCL. Let's get Exxon. Or XOM, other big oil companies as well, LUV. There we go. So we've got, 12 stocks. Let's go ahead, create the watch list. We'll call it Trendy Stocks. And there we go. Our bank stock's good, not Fed, holding 0 interest rate. So Zahor, the common mindset with banking stocks. It's a great question. The common mindset though is that, with low interest rates, banks are going to have a harder time being able to generate extra income or extra growth or extra money because of lower interest rates. When there's higher interest rates, they have more flexibility and can gain more from it. So actually, that's why you saw banks dropping recently or dropping yesterday when the Fed announced that they were going to keep rates low. just because of that fact alone. All right, so we've got our list together, and let's take a look at this here. We see Charles CRL being number one. And also, the great thing about this, if you're not familiar with what each stock is, you just pull up the full stock analysis report. Charles River Laboratories. So it looks like biotech. There you go. Being the number one performer here right now. It's down 3% right now as well, but that's okay. Everything's going to be typically moving lower, but no surprise there. Look at Zoom meeting. This took a huge bounce when the market started coming down end of February, beginning of March. No surprise we're seeing it taking off as coronavirus fears start to pick back up again. But then we take a look. ExxonMobil down 5%. Alaska Airlines down 10%. Love down 8%. MRO 9%. So we're seeing big losses out of these industries that were just starting to pop. Everybody was finally starting to feel comfortable looking towards 2021, getting over these issues that we're having now in the market and moving on from there. But all of a sudden, with fears starting to pick back up, we're seeing these same sell-offs that we noticed before in the same areas. So how can you take advantage of that? Well, if you've taken advantage of these stocks at the bottom fishing opportunities, now is the time. If you haven't already started protecting profits, now is the time to definitely consider that. Going through those steps that we talked about last week, the 4 tips on knowing when to sell a stock, running through those on these stocks will definitely help give you some answers as well. Let's see. What is your take on Tesla? So Jamal, as always, we always save our how to analyze your stock in less than 20 seconds towards the end. So keep that or stick around, stay around. We'll answer that for you. We'll take a look at Tesla, no doubt. But for right now, we're going to talk about, what's going on, analyzing these, how you can benefit from it. And then we'll get into analyzing any stock that you guys want to take a look at. So awesome. All right. So getting into it though, let's start off with Alaska Air. We read the analysis on it. Now, all 4 of these indicators that we see here, the RV, the RS, the RT, the VST, are all going to be on scales of 0 to 2. So above 1 is favorable, below 1 is unfavorable. If you can remember that, VectorVest is going to make your life a lot easier. So looking at the RV, the long-term potential over the next 1 to 3 years, above 1 tells us it has good long-term potential. But then we look at the RS. Now, this is looking at the consistency and the predictability of their financial performance. So above 1 shows that the stock has good financial performance, consistent financial performance over a long period of time. Below 1 doesn't have that. So therefore, more risk would be associated with it if it has an RS below 1. Then we look at the timing. 1.0 tells us the stock is flat on a short-term basis. Overall, the stock's favorable, but not by much. So really, the key thing to keep in mind here is when we look at this one, it has an RS below 1, telling us that there's more risk associated with this stock. Now, we knew that going into this. We've been talking about how these stocks were moving sideways. You saw the breakout out of that sideways move. I'll just zoom in real quick. So we were talking about for quite some time this sideways move here, looking for a breakout above resistance right around, where is that, $33, $35 roughly? Well, we had that, had a quick run up, and now we're back down to retesting in just a matter of days, retesting that resistance zone, which resistance is now going to be support. So over the next couple of days is going to be very telling on what's going to happen with some of these. If they break that that support floor, then expect these stocks to continue to move lower. And if you're not already booking your profits after the last couple of days, this would be a good time to be doing so. Let's move on to the next one. Love, we'll go back to the analysis first and foremost. So looking at the analysis, Southwest, poor long-term potential, but pretty solid fundamentals. They have consistent earnings growth. That's going to be the key that drives stock prices higher long-term. Not short-term, but long-term. Then we look at the timing, 1.13. So even with the pullback today, on a short-term basis, still in an uptrend. Overall, the stock's favorable, but not by much. So these stocks both of them that we've looked at have been opposite sides. One's been more conservative, one's been more aggressive, but at the same time, they're both just about average, even with the big push that we've seen off of the lows here. Can you request add stochastics in the bottom of the graph in mobile versions? Yeah. So what we do, let's go ahead, jump into the graph real quick. Go to the graph settings. We have MACD, RSI, and DPO that you can add here. Just by default, stochastics is one that I've had requested. But obviously, the more people that request it, obviously, the faster it's going to get in there. So just shoot our support an email letting them know that you'd like to see that. All that helps me out and gives me the ammunition I need when I go to our development team to say, hey, look, we have people requesting this. This is something that everybody wants to see. We have the data supporting that. So just shoot our support a call or support an email and letting them know that you want to see the stochastics on the mobile app. But yeah, thank you for pointing that out. That definitely helps me because I've been wanting to know I've been wanting to have stochastics added for quite some time to it. All right, so we've talked about love, Marathon Oil. Marathon Oil, poor long-term potential, a lot of risk here. Look at the timing, 1.29. So you had a speculation here. Anytime you have the RV and RS below 1, that identifies a stock as a speculative stock. You're speculating that, the oil companies and major oil producers are going to come to an agreement and figure out a way of getting prices back to, where they're making money again. Well, what'd you see? You saw a huge spike in oil just a few days ago off of news that they were going to come together and get something settled in. We'll just zoom into a 1 month here. But you had a spinning top just a few days ago here. And then since that point, the MRO has been selling off, giving us a lot of concern. Whenever you see a spinning top like that, if you're not familiar with candlestick patterns, I definitely recommend to start learning more about them. VectorVest has some great courses teaching you about candlestick patterns and how to really utilize them. But if you're not familiar with candlestick patterns, definitely learn up on them, because when you see things like this, especially when looking at the graphs, it can give you a lot of insight before a major move happens to help you protect your profits and help you become better investors and smarter and more or quicker investors as well. So we see that it's gone from 840 all the way down to 650 in a matter of a couple of days. You definitely don't want to be holding that when it's doing so. So American Airlines, good long-term potential, but a lot of risk to get to that long-term potential. With the sell-off today, RT is now at 1 or below 1, telling us that the short-term trend is now reversing, starting to move lower, giving you another warning sign. VST is below 1, telling us the stock's not favorable. So we'll use this as an example, though. If we zoom out, let's go 3 months here. Let me just switch it over. There you go. So we look at what price was doing. Price was moving sideways for quite some time. Well, all of a sudden you see huge spikes over the last couple of days or in the last week or so, and then big drops again. That's price volatility. As we talked about last week, whenever you notice price volatility starting to pick up, that's a sign of a stock starting to, something is changing in investor sentiment on that stock. Well, it went from bullish and now it's bearish very, very quickly. That's one sign. The next thing, you notice the RT finally starting to cross below 1 as of today. That's another sign that, hey, if you're still in this stock and you need to, you're wondering what to do, that's another sign you should start protecting your profit. We've seen it. We haven't hit that sell rating quite yet, but getting close. So there's 3 out of 4 signs that we talked about last week, all showing with this one example. RT's below 1. There we go. Now, for it to get to that sell price, the price of the stock would have to fall below its stop price. If we scroll down just to find that stop price, Stop price at the very top, upper right, 12.76. So it'd have to fall about another $2.20 roughly to get to that sell rating. That's the final line in the sand. As we always mention, you don't want to be the sell rating is, if you haven't gotten out by that point now, you need to sell now or hold your own risk. It's very, very conservative. Most likely you're not going to be sticking around till it gets to that point. How can you see the desktop version? So, Danny, if you don't have the desktop version, if you're just on mobile, give our support a call. They can talk to you about the different options. But above me, you do see the VectorVest 7 real time, which is our desktop app that you can upgrade to. And if you have the desktop, you automatically get the mobile included. So if you're wondering about it, just simply give our support a call. They'd be glad to answer all those questions you have on it. Click on that green graph. We've looked at AAL already. We're going to move on to the next one here. PK. So Park Hotels Resort. Poor long-term potential. A lot of risk associated with it. Timing 1.19, telling us that the short-term trend's starting to pick back up, but probably pulling back as of today with the more recent fears that we've seen. Overall, even with the short-term uptrend, the stock is not favorable. So all of this tells us that, these stocks that everybody was buying in on don't have the fundamentals to back up these price movements. We've been talking about it time and time again here. So with that being said, everybody keeps asking over the last few weeks, are cruise liners good to get into? Are oil stocks good to get into? Are, resorts good to get into? All these different areas that have been crushed over the first pandemic wave that we had. And everybody was speculating that things were going to get better. Things are, smooth sailing from here. The main pain has already been felt in the market. Well, it tells us that because the fundamentals aren't strong, any sort of even rumor that, things could go back to the way they were just a month or two ago can quickly change people's minds on these stocks, and tells us that, there is still a lot of risk to be had in these stocks. Let's go take a look at the next one. Norwegian Cruises. This is one that keeps coming up time and time again. So RV below 1, poor long-term potential. RS below 1 has a lot of risk associated with it. RT below 1, short-term downtrend now. Overall, the stock is not favorable. Take a look at the graph. We can see the hope all of a sudden it tried to breaking out of this level of resistance here, right around, let's call that $18, $19 a share. Broke out, got follow through, and then pulled back and now retesting that support zone again. So we talked about it a few weeks ago. Support resistance is a great crowd mentality indicator. You can use that here to help you identify whether or not the crowd is in favor of this stock or the crowd is giving up hope and starting to pull away from it. So everything that we've talked about over the last few weeks throughout our sessions can still be applied even to this day. That's the great thing about tuning in on a weekly basis, is the stuff that we cover here are things that can be used regardless of what the market is doing, regardless of who you are, what your investment style it is. All the stuff that we cover here will help you become better, smarter investors, because our main goal is to help you reach financial independence and be able to, live comfortably off of your investments and retirement accounts, whatever it may be. So we get back into it though. As you can see, we're noticing a very similar trend. All these stocks that everybody keeps asking about over the last few weeks, or all these stocks that you see on the headlines on TV that, the newscasters are saying, oh yeah, these stocks are hot right now, go and buy. They're not that great of investments. Yeah, there's a lot of speculation. There's a lot of risk involved with them. And the VectorVest analysis has been spot on throughout all of this to keep you aware of what type of stocks you're actually getting into. Now, if you're a short-term momentum trader, yeah, you may have taken advantage of the 1 or 2 days, but for somebody who's looking to, buy and hold, or, more of a swing trade longer than, a few days, maybe a few months, we haven't really had those signs to tell us now is the time to be getting into them. Keaton is asking, can we pick 2 indicators like RT plus CI? You can on the desktop versions, good for Midas Touch stocks. So unfortunately, you can't build your own custom indicators on the mobile app. You can only use the ones that are predetermined. We do have CI in here. The combinations of one another, you can't really get to. That is one of the things we want to add is RS plus CI, or even like you were saying, RT plus CI. Unfortunately, though, there haven't been built into the mobile app quite yet. There's some coding on the back end of things that needs to be done. But we are working towards that, and that's definitely been a popular suggestion. So hopefully that answers your question on that one. All right, so we've looked at all of these for the most part. Last one we'll take a look at, XSPA. Poor long-term potential, a lot of risk associated with it. It's in a downtrend. Overall, the stock's not favorable. The value's at 13 cents a share. It's now trading at $4.55 a share. Grossly overvalued. Overvalued stocks tend to get hit harder than undervalued stocks in a sell-off in the market. So we see a lot of risk with this one, a lot of poor potential, just a lot of speculation. What's it doing today? Down 9%. There you go. So hopefully this answers a lot of the questions a lot of people have been having over the last few weeks of, oh, should I buy into airlines? Should I buy into oil? You know, there's talks about this happening. Everything seems to be getting better with this. There's a lot of, hopefully this answers all those questions that you guys have been having, and gives you, actual usable information that is not just opinion based. It's data driven, really focused on actual data rather than, the way people are feeling one day or another, or having any bias put into it. So that's a great thing is, if you look at one stock, try to compare it to another, you're comparing apples to apples rather than comparing apples to oranges. If you're going off of lots of different news sites and going off of what one analyst says and then what another analyst says, you're not able to, quantify that on and make that comparable one-to-one. You're still comparing apples to oranges at that point. So that's where the power of VectorVest really shines. It allows you to analyze any stock out there on the same playing field so you get the exact information that you're looking for and making smarter, better informed decisions here. All right, so if you guys have any questions on anything about these industries or what we've covered here today, let me know in the comments. If not, if you've been enjoying this session, if you want to share this information out with everybody else or your friends, family, help them make better, smarter investment decisions, don't forget to hit that share button on this video here today. Get the word out so that way people don't make the same uninformed decisions and get caught off guard and lose money in the market. We want to help you make money in the market. So spread that wealth with everybody else. All right. With that, on that note, if you've been enjoying today's session, don't forget to hit that like button as well right below me. Smash that like button. All that helps me out. Lets me know that you guys have been enjoying today's session as well. Can you show the differences between the watch list and portfolios? Sure, Mike. So watch list, allows you to analyze your stocks. It's not going to take into account money management or how many shares you have of one or another. It's just going to be giving you the analysis on your individual stocks. If you look at the portfolios are really going to be where you put in your money management. How many shares you're buying, how much does that affect your portfolio? Gives you your ROI, gives you your overall equity curve so you can analyze that. You can look by days gain. You can also use our personalized indicators as well. But the portfolio basically will show you a copy of your actual trading account. The watch list will help you get the information on an individual stock to help you make smarter decisions and help you really get a true understanding of what the stock is, all about it there. All right, so with that, let's go ahead. We'll start to analyze, get into the fan favorite, analyzing any stock that you want to take a look at. So if you have stocks you want to take a look at, let me know in the comments section. We'll start to get those analyzed there for you. Why we do that, Mark? We go live every single week, every Thursday at 11 a.m. Eastern. If you ever aren't able to attend, you can always go back to the VectorVest Facebook page and click on the live video section. And there you can watch replays of all the live sessions we've ever done. Given the market, or given how down the market is now, where would we look at on the desktop version for possible stocks that have been hammered but could come back? So Steve, a lot of that market's not down that much. If we look at the homepage here, MTI still tells us we're in overbought territory. Buy to sell ratio still tells us we're in overbought territory. So this is just, the first sign that the market may be starting to reverse course. I think it's a little bit too early to focus on, finding stocks to bounce back from, just because our indicators tells us that the market has more downside risk currently than upside potential. So we'll get into those sessions about, how to be able to find stocks that are oversold once the market's closer towards those bottoms here that we typically look for. But if you want help with the desktop app or the desktop program, give our support a call. That's what they're there for. They can help you out with that as well. All right. With that, first one, I'm going to get to Jamal. He was asking about it. He's been patiently waiting. Thank you once again for your patience. Let's jump into it. Answer the questions. Tesla. TSLA. So Tesla. Decent average long-term potential. We'll call it average. Not great, not horrible, average. Safety. Looking at the consistency in their earnings performance. 1.33 tells us they have good earnings performance. They have good longevity in their earnings performance, which tells us there's less risk associated with that stock because they have the earnings to back up higher price movements. Looking at the RT, 1.96, extremely strong uptrend, makes us a little worried on a short-term basis that the stock may be, overbought a little bit. But overall, the stock is favorable. It's down 1.87% here today, but it was just $400 a share just a month or two ago. Now it's over $1,000 a share. So yeah, expect some sort of a pullback at some point. But fundamentally, the stock's a good stock. We take a look at the graph. You can see it just gapping up over the last few days. Expect some sort of a pullback. Who knows how much? Follow what we've been talking about or go back and watch last week's video if you haven't done so already on the 4 tips of knowing when to sell. That'll help you make sure you're locking in your gains and protecting your profits on it. But yeah, overall, take advantage of it while it lasts. Stock's definitely got some potential there. All right, let's see. Shabir, awesome. Thank you for that feedback. I'll definitely bring that to our team. More sessions on the mobile app every single week. We go live, so hopefully we'll see you next week. But maybe we could figure out adding more sessions here to our mobile on our Facebook platform. All right, Tom wants to take a look at Fuel Cell, FCEL. All right, Fuel Cell. Poor long-term potential, a lot of risk associated with it. It's down 22%, but still on a short-term basis, overall moving higher. Big day update yesterday. Sell off here today. Definitely has, a speculation factor to it here, which is what the analysis tells us. Overall, the stock's about average. So keep your eye on the RT. That's going to be the main thing that you're going to be focused on as a speculator. APT. Give me one moment here. All right. APT. Good long-term potential. A little bit better than average fundamentals. So a little bit better or a little bit less risk associated with it compared to the average stock out there. Decent uptrend. Overall, the stock's favorable. Looking at the graph, realistically, over the last 3 months, the stock has moved sideways. I would wait for a breakout out of that sideways movement before really jumping on board. If you wanted to, you could take advantage of the bounce we had just a couple of days ago. You have the low end of that channel here around $9 a share. You have the high end really based off of where we were. Where is that? Around 16. If you wanted to try to play that bounce back and forth between that channel, go for it. But just know there's a lot of risk associated with it. If you're looking for the breakout, wait for it to break past that 16 range. All right. Let's see. Facebook, FB. Facebook, good long-term potential, less risk associated with it, nice strong uptrend. Overall, the stock is favorable. NIO, poor long-term potential, a lot of risk associated with the stock. It's in a strong uptrend because it's basically following what Tesla does. So overall, it's in a really strong uptrend. Overall, stock's favorable because of that short-term momentum. But just be careful because you are, taking a lot of risk associated with that. DFEN. All right, so looking at an aerospace and defense ETF. Now, for anybody new or not familiar with what VectorVest does, or maybe you're not a subscriber currently. Whenever you're looking at an ETF, they don't report quarterly earnings like a stock does. So therefore, the RVRS, the fundamental indicators that we use here at VectorVest, are always going to be pegged at 1. So when looking at an ETF, the primary focus is going to be RT. If it's above 1, that ETF is in a short-term uptrend, so therefore it's favorable. If it's below 1, the ETF's in a short-term downtrend or unfavorable. As we can see, 0.92 tells us it's in a short-term downtrend, so therefore it's not favorable right now. Let's see. AXAS. Poor long-term potential, a lot of risk associated with it. It's in a downtrend. Overall, the stock's not favorable. BA. Poor long-term potential, a lot of risk associated with it. It's in a short-term uptrend. It's been a lot of speculation behind it. Overall, the stock's about average, but be careful because it is a speculative stock. Aurora, let's go ahead. Aurora Cannabis, ACB. Poor long-term potential, a lot of risk associated with it. It's in a slight uptrend right now on a short-term basis, but not enough to make this stock favorable right now. HEI, good long-term potential, less risk associated with this stock. It's in a strong uptrend. Overall, the stock is favorable. For a while, this was one of the highest RS stocks in a database, and it's proven itself. It's been more of a consistent long-term play here. Let's see, SQQQ. Once again, ETF. Therefore, primary focus is RT, 0.07. It's even with an update today, it's in a strong downtrend. So therefore, it's not favorable right now. One day doesn't make a trend. Keep that in mind. CCL, we just looked at that one a little bit ago. AMZN. Amazon, poor long-term potential, but really solid fundamentals. Overall, really strong uptrend. Therefore, the stock's favorable. Amazon has a lot to benefit from because they do the online shopping, online or home delivery. So they're going to be less affected than a retail store, or brick and mortar store. Even with the risks that's starting to arise or the fear of a second wave hitting, Amazon has that ability to really go against the trend of the market because it benefits from that type of a situation. All right, let's see. Stores and feed TJX. Let's take a look. TJX, decent long-term potential, better than average fundamentals, so a little bit less risk associated with it. Steady uptrend on a short-term basis. Overall, the stock's favorable. This would be one, just follow the 4 tips that we talked about last week, and that will really help make sure that you lock profits in on that. With the RT, can you clarify how you identify if it's worth a long-term hold or if it's more of a short-term play? So Kevin, if you're looking for long-term holdings, the main focus is going to be RS. RS is the best indicator you can possibly use for long-term stocks. Now, regardless of whether it's a short-term trade or a long-term trade, you still want to have the stock moving up when you get into it. Nobody wants to buy into a stock and have it just continue to fall, when it's selling off. So regardless of what stock you get into, whether it's a long-term or short-term play, you still want to have an RT above 1. Now, if it's a short-term momentum play, you want to typically see that RT, really strong. So 1.4, 1.5 or greater. That shows, some really, really strong momentum behind that stock. If it's more of a long-term play, you want to make sure it's above 1.1 at minimum. That way, it's still moving up nicely when you get into it. You're not really worried about really strong momentum at the time, but you definitely want to start off, with a running start, if you will. So hopefully that answers your question. Does the desktop version not work with Mac? So the desktop is a Windows-based version there, Danny. I'm actually a Mac guy at home, or a Mac guy for, I guess, 10, 15, almost 20 years now. And if you run Parallels, VMware, Boot Camp, one of those, partitions, it runs great. I use Parallels personally, but, different strokes for different folks. I've done it through Boot Camp as well. But all of those work really, really well to run VectorVest on. Let's see. McDonald's, MCD. McDonald's, poor long-term potential, a little bit better than average fundamentals, so a little bit more or less risk associated with it. It's in a steady uptrend. Overall, the stock's favorable. USO, looking at oil. ETF, so therefore it focuses RT at 0.5, tells us stay away from it right now. It's not favorable. AMAT, good long-term potential, less risk associated with it, still on a short-term uptrend. Overall, the stock is favorable. Now, regardless, when we go over this, just make sure everybody's clear on the same page. Even if the stock is favorable right now, if you're not already into the stock, market timing dictates or trumps any individual rating on a stock. So even as we looked at AMAT, the stock is still favorable right now. But if you're not already into it, right now we would not be getting into it because we have that one red light. And the guidance is telling us to not buy anything right now. Unless you're going to be taking a risk and, trying to play the downside of the market, trying to jump in early to take advantage of a sell-off. You could do that. You could play the market to the downside with contra ETFs, but you're speculating at that point. You're taking more risk doing that at that point. But right now on a day like today is not a time to be buying long positions or long stocks. Let's just put it that way. All right. Let's see. SHOP, SHOP. Poor long-term potential, but less risk associated with it because it has solid fundamentals, really strong uptrend. Overall, stocks favorable. COTY. COTY. Good long-term potential, a lot of risk associated with it though. It's in a steady decline. Overall, the stock's not favorable. THO, Thor Industries. Good long-term potential. About average risk associated with it. Really strong short-term uptrend. Overall, the stock is favorable still. APPN. Poor long-term potential. A lot of risk associated with it. It's in a steady uptrend on a short-term basis, but double check the graph. Make sure the RT has actually been falling, not rising. So therefore, stock is not favorable right now. NIO, we looked at that. Aurora, we looked at that. Costco. Sure, we can take a look. COST. About average long-term potential, but pretty solid fundamentals. Less risk associated with it. On a short-term basis, the stock is flat. Therefore, because it has good solid fundamentals, the stock is favorable, but the trend really isn't there right now. CVE, poor long-term potential, a lot of risk associated with it. It's in a steady uptrend though, but that uptrend isn't enough to offset the poor fundamentals. So therefore, the stock is not favorable. All right. AMD. Good long-term potential. Less risk associated with the stock. On a short-term basis, it's been on a really nice, strong uptrend. Overall, the stock is still favorable, but with everything, just be careful. A lot of stocks have had really nice runs. Make sure, if you're not familiar with the 4 tips we talked about last week, to go back, watch the replay of that. That should help you out a lot. All right, we'll do one more real quick, and then we'll start to wrap things up for the day. What videos on the university can I start watching for beginners, stock investor like me? I usually do mutual funds. So, Angelo, that's a great question. One of the things I would definitely recommend to do is, first and foremost, give our support a call, go through that getting started. That'll help you get an idea of what you should be focusing on right out of the gate. Also, under the more settings from the mobile, or in the mobile, you have the resource center. You have the successful investing Quickstart course right here from your smart device. Everybody has access to this. If you're brand new to investing, this is a great place to get started with. I believe there's 5 or 6 sessions. Yeah, you have an intro and then actually 5 sessions. But go through this. This will help you out tremendously getting started. So finally, the last stock, let's see, where is it? KGC. We'll do KGC. Go back to the search feature. KGC, good long-term potential, or great long-term potential actually. A little bit more risk associated with it though. Really strong short-term uptrend. Overall, the stock is favorable. Now, if I didn't get to analyze your stock today, don't worry. That's okay. If you're already a subscriber, just pull up the mobile app when you sign in. In the upper right-hand corner, you have the magnifying glass. You just tap on that, type in the symbol that you're interested in, and you can do the same type of analysis we're doing right now, right from the palm of your hand. If you're not already a subscriber, click on the link in the pinned comments. You can download the 2-week free trial. Do it. You can do a test run of it, analyze your stocks during that period. And as the old saying goes, seeing is believing. Once you put it to the test, you put it through the ringer, you'll see exactly how powerful this app can be for you. And you'll definitely, there's no doubt in my mind, you'll never want to go anywhere or invest any money without it. So hopefully that helps you out. And now we do have one last request of wanting to take a look at our... if you don't have, or we want to take a look at what the VectorVest is telling us. So we'll jump right in. I'll remove this box here. And then give me one moment. We'll go into graphs. He wants to look at the market timing graph. This is something unique with the desktop. Hopefully we're going to be adding this into the mobile soon. No exact expected time frame on that. Let me go ahead and delete this. But as you can see, MTI is starting to roll over. Buy to sell ratio is starting to roll over. RT is starting to roll over. We've been in a really nice strong uptrend. You can use trend lines if you like. Just a quick look right there. You can see we're retesting that trend line as of today. Definitely something that you want to be aware of. And just one last thing we'll leave off with. If you go, let me see, 10-year. We'll zoom out even more. Horizontal cursor. 1.7, 1.74, 1.75 was about the highest we ever reached until just recently, where we hit 1.8. And that's over almost 20 years of data, folks. If that doesn't, make you worry a little bit of where we're currently at, I don't know what else will. And this is what we talked about 2 weeks ago when we, talked about keeping your eye on the MTI. Looking at the buy to sell ratio, the last high that we had was about a level of 8-1 or 7.5-1. Now we just hit, 12.5-1. Keep that in mind, folks. Be careful. Just err on the side of caution. What we've been preaching the last few weeks, obviously that's the message we want to leave off with today. So, with that, canceling out of that, we're still one tick into the red. Price is still down. We're still down on a week-over-week basis. Still have more stocks declining than advancing. Dow, NASDAQ, and the S&P are just going down even more. So just be mindful of that. Be cautious. And if you're not familiar with last week's, or if you missed last week's, definitely go back and check that out. That should really help you out on knowing when you should take your profits if anybody's been bottom fishing on here. On that note, if you've been enjoying today's session, or if you want to, let your friends, your family, other people who you know that are trading in the market be aware of where we're at, help them have actual useful information and not just give them data that, takes them hours to try to break down on their own. Make sure to hit that share button on this video. And if you haven't already hit the like button and haven't already hit the like button on the VectorVest Facebook page, don't forget to do that as well, because all of that helps me out, lets me know that you guys are enjoying these sessions, and also lets you know that when we're going live and if there's ever any changes, we'll get you guys the most recent info as soon as possible. So on that note, once again, thank you guys very much for tuning in today. My name is Patrick France, Senior Instructor here at VectorVest. It's been my pleasure working with you guys. Thank you guys for all the support. Have a great rest of your day. Be safe out there, and we'll see you all next week at 11 a.m. Eastern. Bye for now, everybody.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.